Hey, Happy New Year. Welcome to the first transaction review and calculator practice of January 2017, or the first one of 2017 here in January. Anyone, can you guys unmute yourself so we can just say hey for a second?
This is Kathy.
Hey, Kathy, how are you?
Good, how are you?
Hey, very good. It's always a pleasure to have you with us, so thank you very much. Is there anything in particular you're going to want to ask or share tonight? Just put it on in the back of my mind, or?
Not tonight. I just wanted to let you know I did see Mary Hart the other day. We had lunch together, and we had quite a nice laugh. And you'll know what we're
yeah, we that was a great time in Austin, and yeah, she got to since we were roommates, she got to hear I woke her up with my nightmare I was having one night.
Yeah, she said, and she said she wouldn't say that unless you had already shared it with me, so that was fine.
Oh yeah, I'm pretty transparent overall, and I have to poke fun and laugh at myself, whereas it doesn't make any sense. Well, yeah, it was. Yeah, well, great. Thank you so much for being here. Look forward to any of your input that you have as we move forward. Is anyone else here that has a mic and can speak?
Hi, Don. It's Dave from Michigan.
Hey, Dave. What's happening?
Oh, just doing my thing. It's like 5 degrees here, so
Degrees.
if you're looking for a vacation destination, come on over.
Yeah, exactly. Well, I don't think I'll do it. We've had so much snow this week, but it hasn't been terribly cold, and but that just means good powder condition for skiing. So.
Sure.
Okay, so for the purposes of this, and of course, just our standard disclaimer that this is my opinion only. You should always consult your trusted advisors and professionals. Just for calculator practice, I like to do a couple minutes of this at the beginning of each meeting that we have. And this was a deal that someone called me about, a guy that does a fair amount of business doing a lot of flipping, and he started to own or carry a few of them. And he's trying to figure out how to put this deal together to make sure he's got the paperwork in place and Dodd-Frank compliant and all of that. But so he's got this house under contract to a guy for $138,000. I said, "Wow," because he's going, "Well, I want to sell the whole note." And I go, "Well, I don't really buy the whole note on green paper." But then I go, "Well, what's the down payment?" And it's $85,000, right? I can't remember the percentage down. It's probably in one of the following slides. Right, so actually the amounts should be switched, right? So it's really big down payment, and down here I only have a $53,000 note. So is this a totally different conversation than 10% down?
Yes.
Completely, right? I mean, you can't almost go wrong with this note, right? So I would buy this green in a heartbeat as long as everything else stacks up, right? The BPO and the appraisal comes through, and because it's very, very low risk. So now all we're talking is, yield, and does it make sense to both the note buyer and the note seller. The borrower can pay $1,000 per month. So here's where our practice comes in. We're going to pull up my little calculator here. Move this over to the side. All right. So basically, we have. I'm just curious. 53,000. So if that's the loan amount, and we divide it by the sales price, then it's only 38% loan to value. So really excellent, right? Can't hardly get any safer than that. So I put that in PV, present value or loan amount, and what else do I know? The first thing I know is he can pay $1,000 a month for principal and interest. He will pay taxes and insurance on his own. On top of that, So how can we set up the note? This investor says, look, I got this guy and I want to sell it to him with 85. I just don't know, how can we set up this note so that I'm happy with what I can get out of it? So let's just run a few numbers. If the note investor needs a 12% yield, let's just say plug in 12%. So if the face rate on the note is 5, so we plug in 5 here. First thing we have to figure out now is what? N, right? So basically 5 years. 53,000 a month at 5% interest will be fully amortized in 5 months, no balloon payment over here in future value. So if the investor needs 12, and this is what the note looks like, do any of you have calculators in front of you just for kicks and giggles? You know what the number is going to be? So I put the 12 in here, and then I solve for PV to go, okay, if I want a 12% yield and I buy this whole note right after it's created, table funding or simultaneous closing, I would pay just under $45,000 for this note. So, that's a pretty small discount, right? Divided by 53,000, that's 85 cents on the dollar, right? So only a 15% discount to walk away with this cash. I actually don't know how much he has in it. But I'm just curious, if we recreate the note and he bumps the interest rate up to 9%, which is closer to private money rates, so we know he can pay $1,000 a month. We know the loan amount's that. Now we want to put the face rate of the note a lot higher. This number now is a lot higher, closer to what the investor is looking for. So the closer this number, the face rate on the note is to the yield expected by the end note buyer, the smaller the discount. Since 5 is a lot farther away from 12 than 9 is, there's going to be a bigger discount for a note with 5% than 9%. So I'm going to solve for N. So that's going to take him a lot longer, right? Well, 8 more months to pay it off with a 9%. Not horrible for him, right? So anyway, so now I put that 12% in. So now if that's the way the note looks, and I put in 12, then I solve for what I could pay for that note. Now it's 49,070 divided by 5,300,000, I mean. So that's 93 cents on the dollar. Okay, any comments? David, Kathy, would you buy this note at a 12% yield? Any comments?
I would say yes with that coverage.
Right. So it's super safe, right? And it's really decent return. And here's what I want to look at. Let's look at the full amortization here, and I hope you can see this. Is this easy to see? Yeah. So can you see this part right here? And if not, maybe Axel, when you're working this you can make it bigger somehow. But you can see that the total interest to be made is $18,700 over that, what is that, 5.5 years or so? And so because you're getting, like, from the get-go, you're getting $500, more than $500 in principal back. So there's a really aggressive return of principal, which keeps you super, super safe, right? But there's a certain thing where you put out $49,000, let's say, right, to buy this note, and you're going to make 18, and you're making 12%, which is a great yield. But some people will look at that and say, gosh, I'm going to tie up almost $50,000 for quite a time and only make 18,000 on it. And even though you're getting the principal back, it's hard to just like quickly redeploy every $500 that comes in. So some people will go, it looks like I'm making a really good yield, and it just depends. Maybe this is if it's a self-directed IRA account or something else, it could be just the perfect fit. But I would look at this and go, for the amount of time. For instance, I had a gal that said she had a note that would only have 3 years left on it. And she said, well, you're going to get your money back soon, so, you know, you should be able to pay like 90 cents on the dollar for this thing. But the thing is, I would have to tie up $70,000 in order the total interest made over the term was only like 4,000 or 8,000 or something. So you're tying up 70,000, and in the end, you're making a great yield by the calculator, but is it worth the time to tie up that much capital? Does that make sense?
Yes, it all depends on your your agenda. A 12% return to someone that would otherwise be making 1 or 2 is a terrific deal. But
Right.
as you say, tying up 50,000 for 5 years or whatever it is, it all depends on your options. I mean,
Right, your options and how nimble you are at redeploying, principal that comes back in, right?
Yeah.
So a lot of people will go, this looks really great in the calculator, but a lot of same people will go, well, I'd rather do a $50,000 interest-only loan for 3 years, and I know I'm going to get interest on all my money that whole time. You see, so it's just a different mindset. So I like all different kinds. I like different lengths of notes and all of that, but what I was is I'm still going to offer just a discount. Like I'm going to go, the most I'm going to do is like 80 cents on this thing. So I'm going to take the UPB, the unpaid principal balance of 53, because I want to make that 20% upside no matter what the yield says it is. So if I can only pay 42.4, then what's my yield going to be? So to me, okay, that'll be worth it. My yield, so it's going to be 18. That seems like, oh, you're money hungry, but really, it's just to make it worth the time of tying up the capital and putting the deal together. Now, for tying up less money, I'm going to make 25,000. So that's just how I kind of think about it, because even if you were making a 20% return and you have a big chunk of money, but you get it, most of it's principal, it can be kind of discouraging to even work with it, if that makes sense. So anyway, that's just kind of, and so he says, okay, thanks for that, and he was frustrated at the fact that it can be hard to find people that are, across the U.S. with the whole Dodd-Frank thing. He wants like one attorney and one MLO, a licensed mortgage originator, and just the one-stop shop, and that's really super hard to find. I think, David, didn't we talk about that with you? You had done your homework and you come up with a great contact in your area, but people are frustrated when they're looking online and trying to find a one-stop shop attorney and LMO to do all these owner finance deals. Any comments?
Well, to that point, yes, it almost has to be state by state. I mean, if you're in Nevada, you need a Nevada person, and the problem is that for a RN MLO to become licensed in multiple states is cost prohibitive, and there's different rules for different states and so forth. So, that's been our finding, is that if you're doing business in Ohio, you need a person in Ohio, and if you're in California, it needs to be California. And
yeah,
so you need a team.
Yeah, and also you're going to get different answers from attorneys as well as of other people. So it's kind of a dance. But I said, look, as long as you just have your mortgage guy underwrite this deal for you. He had a real estate broker who has an MLS within their umbrella company. I said, as long as you do that, just prove ability to pay, so that he has a reason. You're just proving that you're not knowingly setting this guy up for failure. But realistically, with an $85,000 down payment, it's I said I wouldn't have any trouble with this. If you just do the basic due diligence, I would definitely buy this at closing and be happy to do so. But I told him that my top would be 80 cents, just because it has to be worth my time to put it together and tie up the capital and all that. So sometimes just the yield doesn't tell the whole story. I mean, what if you were like, okay, I don't know, just make up a number. I'm going to put out $50,000, and I'm going to get back, $5,000 a month for, what would that be? Let's just say 12 months. What's that? Oh, that's really good. That's not a good example. So 10. Yeah, so it's really, I'm just saying, so if you can put, if it amortizes back too quickly, it's really not, worth doing it. This is not working exactly as I thought, but I guess you get one extra payment, that's great. But when someone has an amortizing loan that's at the very, very end, let's say they've had a 10-year note, and then all of a sudden, they're just selling it, at the end when there's 3 years left, there's just hardly, unless they're willing to discount, it's not even worth the time to do it. But I wish I could remember that one deal. It was a lady in Texas that, said, oh, well, the yield's so high if, whatever. But I said, yeah, but I can only make $4,000 tying up 70 grand, so that doesn't make sense, or something like that. So I hope this is okay, Tony, because, and I won't give away addresses or anything like that. Tony, and I want to welcome you again. He's a new member of our community, just joined last month, and we had a little introductory chat yesterday. And one of his main objectives is to buy a property for his son, and it'd probably be some sort of cash flow situation as well. But it's a perfect property for them. And he's going, I'm going to be in the area this weekend. I want to be able to present an offer. So we were talking about, how can you put an offer out that you can still get the seller cash if they need it. So the house is listed at 170. And actually, this looks to be market value. When we were online together yesterday, we checked Total View Real Estate. Are you guys familiar with that?
No.
I'm going to bring up my messy, so many tabs open. So this, TotalViewRealEstate.com. So this is a place where you could put in an address. Heck, let's put in one property I took deed in lieu and just resold. Birmingham, Alabama. I cannot remember the zip. Remember me, log in. Okay, that one then. Independence, Missouri. And the thing I like about this is that you can get it pulls in Zillow, so it gives you the map right here. It gives you comps, and it has Zillow over here, and then it has this website's estimate. So Zillow says this property is worth $86,000, and they think it's worth $85,000. It gives you the property information from the tax assessor. The tax assessment value is $68,000. You've got other. They've sort of they try to bring in Rent-A-Meter. I don't know why. I don't see anything there from Rent-A-Meter right here. But anyway, it's just a nice bird's eye view of it. Anyway, so based on the online research we could do with the comps, the point I wanted to bring up is that this was a very fair price. It wasn't like it's not selling. It's getting stale on the market, so he's very hopeful that the owner is willing to entertain an owner carry offer. It looks to be, and Tony told me yesterday that he'd be willing to pay $180 for it. And what's the other point? What else do we know about this property? I went ahead and looked up online, and we found out that the owner is a non-owner occupied absentee owner. So this means it's an investment property, which means he'll have capital gains and a fair amount because he purchased the property in 2011 for 67 cash, right? And so he owns it free and clear. So we've got a situation where there's a fair amount of capital gains that he'll have to pay when he sells this property. Also, what was the other thought I was having? Anyway, and since he's out of state, and what was the other point? Shucks. Anyway, this is a perfect setup, really. So unless the person really needs cash for another purchase or some other reason, it depends on what they're going to do with the property or with the money. If they're going to stick it in the bank at 1%, then it's easy to offer them 4 or 5% and do really well with that. And in the context of saving them a bunch of capital gains, what does anyone make a guess of the average capital gains that this would be just if they didn't do any major improvements? What's the basis being 67? What do you think this guy's going to write to the IRS at closing? And it's not a guy, it's a woman. It's I think a Vietnamese woman that lives in the Bay Area. Hey, Ken.
Hi, Don. I'd say 50,000 plus.
50,000?
Well, she has to recapture depreciation too.
For 5 years, yeah. So 103 times 0.25. Well, that would be a lot. But at the minimum, like, yeah, at least 25 to 50,000, right? So even if they have additional money they've put in or something. So this is a prime target. So for an owner carry offer. So basically, this is what Tony wants to do, and I'm sorry that we can't hear from him. I would love for him to be talking right now. But he says, I go, well, if he only wants to put down, and they have the ability to get financing down the road, but they don't want to do it right now. But within 5 years, he's totally planning to refinance this out. So he wants to put down 10%. And the monthly payment and actually the interest didn't seem to be of that much concern, if I'm remembering our conversation correctly. So he wants terms really, really bad. So here's what I suggested is just offer, he goes, I would gladly pay 180 because I think it's worth 180. So just offer 180. And even though, so he goes, I want to know if he can sell the note and just get all this cash. But here's what we know from, where's my calculator? So basically, here's the deal. It'd be such, whatever terms are really, really great for the buyer, like if you're the buyer on an owner carry deal, the things that make it great for you make it unattractive for the seller if they got to sell the note. Because when you're the buyer, right, you want to make the lowest down payment possible, you want to get the lowest interest rate and the longest term, right? Wouldn't you want that if you're buying, and you could get owner carry terms and ask for anything you want? Don't you want the lowest down payment sometimes? Not always, but low interest rate and long term? Doesn't that give you maximum flexibility?
Yeah.
So right, so but that, what does that do to the secondary value value of the note? If low interest rate, really long term, what does that do to the value of the note on the secondary market?
Bring it down.
Way down. It's going to be worth 50 cents on the dollar, right? So the things. So first I said, let's don't think about him needing to sell the note. Let's see if we can first get him to just get her really excited about carrying the paper, saving that 25 to 50,000 in capital gains and depreciation recapture, and having a nice hassle-free stream of income. So let's just say, hey, I'm going to pay you 10,000 over asking, and if he puts 10% down, we have a 90% loan left. And let's even offer 5. I mean, that seems so generous, doesn't it? Because what are the banks lending at right now?
They're about they're about probably 4.75 and up.
Yeah. So it's like this doesn't look. So what I'm trying to do is make it look normal, not weird. So if I create a super custom thing to throw at them, it can look weird, but this looks so familiar, right? 5%, 30-year, like that just seems like, oh yeah, that's just normal financing, right? So, I mean, you could ask for less. I like to get less than 5 if I can, but in this case, you're just trying to look like it's not a weird offer. Not everyone understands owner financing, or they're kind of confused by it, but anyway, that was just what I was thinking. If you, like, let's just put in that 12% again. I'm just curious. $162,000 note. Yeah, that's 50 cents on the dollar right there, right? A haircut. If they sell the note right away, which I don't even know if you can sell a 10% down, unless there's great credit. He wouldn't even be able to sell it. I buy a partial. And now we can add into it a 5-year balloon. That should make it more attractive for the investor, and Tony wasn't adverse to the idea of having a 5-year balloon. It wasn't a hard thing for him to contemplate, and he really wants the property, and it's kind of unusual, and I think that's part of the reason it might not have be selling is, if I recall, it has 4 bedrooms and 3 baths, and it's sort of like a triplex in a way. Like there's separate entrances to the bedroom with a main kitchen, so I think it was used for college students or something like that, where you have 3 people splitting the rent, something like that. So it's perfect for someone who's going to live there and then do, have roommates or Airbnb style to help, pay the PITI on the property. So anyhow, so he'd have a balloon at 148. So, any comments so far? What do you guys think? What's other options for Tony to submit? Because he's going to see it on Saturday, I believe. He's driving over to see this property and make an offer. What would you guys say to him? He really, really wants the guy to carry.
Is he trying to rent this property out, Don? Did you say?
Okay, an important piece is he wants his son to live there because his son's paying $1,100 in rent, and he'd rather have his son and the family building equity.
So, is it important to get the payment down as low as possible?
It doesn't. Tony didn't seem to say that. And gosh, Tony, I sure miss your voice right now. I wish you could call in on a phone or something.
Yeah, well, if he gave the owner full price, and she took back a loan for $162,000, at 5%, he might want to try to go down a little bit lower to 4.5%, but that's not going to change it a whole lot. He might want to try to go 40 years. I mean, you can ask for everything, and if it goes right back to what you've got here, it's not such a bad deal. If the son was paying around $1,100, then you got somebody living in it who can take care of it.
Yeah, and that's the $1,100 from the son. In this case, would already be PITI, right? That would cover taxes, insurance, and whatever, pretty close. And then if you get a couple other renters in here, this is going to be a great cash flow property. Yeah.
And on her end, she's only getting taxed for the principal coming back to her, not the interest. So if you look at the amortization schedule on this, her monthly, is $194. Her first year is only about $2,400 a month that she has to claim and that would be a long-term game, I believe.
Yeah. So I mean, she's going to make. Look at this. She can make not only get $10,000 above asking, but she can make almost $39,000 in interest over the term of the note. So in essence, that's popping her way over, what is it, $230,000 practically for the house. So if you can get people, present an offer and get them to be happy about being in the bank and receiving these interest payments all this month, that would be excellent.
And don't forget too, Don, that the people that you're making the payment to, if you have a 25, 45-year loan, they're the best ones to go back at some point and go, if you really need the money, maybe we can renegotiate a discounted amount. If you really need it that bad, I can get you the money, but now we have to discount the note.
Mm-hmm. Yeah, and also we talked about, at the very least, no matter what, just, him being reminded to put in an offer, a first right of refusal to buy the note, right? So that if the note seller goes to sell it, there's something in the paperwork that we'll make the deal come back to him first. So if she's going, oh, I'm going to sell this note, things changed, he's going to have the first right to buy it at the same price any other arm's length party would buy it for. So that's something we talked about. But even if, so to me, this makes a lot of sense unless the seller of the property really has doesn't mind paying the capital gains and really has already a good place to put the cash. So in that case, with the 10% down, I'm still going to think so now I'm going to come back to safety. So I'm going to come back to, well, let's just even that it's worth 180. The most I'm going to pay for that note is still what? I'm not going to be higher than 65 cents on it, like a hard money lender. So that's going to be the most I could potentially want to risk against this property. And even, I don't know, I'm still a little even nervous about that because, Vegas, last time it dropped by over 50%, right? So, and we could be, on the brink of another reset. I don't know. There's a lot of different opinions. But I would like to even be more conservative in these areas that swing wildly, like California and certain areas. So anyhow, so even if I bought it all out, 117 divided by 162, I mean that's still, I'm only paying 72 cents, so what is that, 28% discount, and the seller is looking to walk away with 170 cash less closing costs. So anyhow, so that's a challenge. But what I, if I would like Anthony, or is it Antonio or Anthony? Anyway, Tony, just to be able to get it with the owner financing terms and the seller to be really happy with that. But to me, the second best thing would be the 10% down, and then I'd be happy just to buy, these payments, right? How much would I pay? I don't know. I gotta throw in a number. Someone is just throwing 15%. So call it 36,000, and I would buy the payment stream, right? So then let's figure that out. So then the seller gets 18K down payment, 36K partial note sale, and then the balloon the seller keeps at the end, something like 148,000. So what is that? I'm going to do the math real quick. 18,000 plus 36,000 plus 148. Okay, 202,000 total. So even we know they're taking a discount, but it doesn't look to hurt that bad, right? Because if they can wait for that balloon for 5 years, that's a total of 202 for a house she's trying to sell for 170. Any other comments, ideas, other things that you could offer Tony as suggestions? He's really, really interested, really, really, really interested in getting this property. Another thing he asked is like, well, gosh, what if I had to get a hard money loan? Well, then we're back to loan to value, right? Most hard money lenders are only going to do this. So, well, let's see if we can get, now, if you're doing hard money, you're just going to pay 170 times 0.65. Hard money would only come in at 110, leaving, the down payment would have to be, a lot bigger. It'd have to be like $60,000 down payment. So. Yeah, I can't hear you. Hey, Ken? Ken? Hey, Ken, I can't hear you. Ken?
I think he stepped away from his desk speaking.
Oh, okay. All right. Anyway, so those are some of the things that I don't know if I hope they're helpful for Anthony, and if he gets to a point where he can open the conversation, then we can work with, if the seller says, hey, minimum I need XYZ, then we can reverse engineer and get really creative on meeting everybody's needs. But first we need just to get them to the table to even consider the idea of owner financing potentially. So, but anyway, thank you, Tony, for your time yesterday. I'm really wishing you well and hoping it goes great this weekend, and hope to hear an answer. Like, I think our next virtual happy hour is Wednesday, is it the 18th, Axel, I think? Anyway, I would love to be able to hear how this went for you. So anything else before we kind of wrap up for the night? Anyone want to share what's going on, or different ideas, or any suggestions for next month?
Hey Don, I have a quick question.
Yeah.
How if Tony's going to go to this guy and propose owner financing, how do you suggest he pitches that to where the owner feels safe to do this? You know what I'm saying?
Right. So how would he be? Well, the thing is, the woman has to. Who knows what makes them feel safe? But people don't even know that they'll carry unless they get an offer. So I said one of two things: either do a letter of intent, just a one-page thing. Here's what I'd like to offer. Here's my plans, and and I would attach an amortization schedule. Over, if you're willing to be the bank, this is how much you'll make over the term of the loan. Also, check with your accountant, but I think it should save you a significant amount in capital gains, and making a decent 5% return. It's a lot better than the banks are paying. So I would just put it that way.
Okay.
Or I just write an offer. Just like go to the listing agent and say, hey, write an offer up for me, and because it's pretty easy to show on a purchase agreement. So just write the offer. When someone who has a stale listing and they haven't had any offers in over 3 months at all, even though they look to be priced perfectly, and you never know, the motivation just might be there. So if they see something in writing, it'll get the ball rolling generally. And I would add a little extra letter of explanation, like I said, along with the amortization schedule. Hey, if I don't pay, you get the property back again, and you keep all the money that I gave you, and we'll be paying taxes, insurance, and maintenance, and you're going to have some nice hassle-free income coming in. So I would just write a really simple letter like that to accompany a formal offer.
Okay, cool.
Dawn, I would say that you'd be wise to engage the listing agent and gauge their mindset on owner financing, because if they're not well versed in it or they're not an advocate of it, it could be a tough road to hoe in getting his offer accepted.
Yeah, so that's another great question. Like, if you were what would you say? Like, if you're having a conversation and let's say this person doesn't know much about it, but they do want to get paid, right? The listing agent wants to get paid. So
right.
let's hear how you would approach that if you were Tony and you're talking to the listing agent and you already know that he's biased toward a cash sale. Right.
The first thing you want to assure that listing agent of is he's going to get paid. Now, he or she probably has a 6 or 5 to 7% commission on this, and Tony's talking about putting 10% down, so that's going to absorb the majority of the down payment. Okay. So the first thing that I would do is assure him that there is a way for you to get paid your full commission on this. And I would ask him, he or she, straight up, have you discussed the possibility of owner financing with your client? The property's been sitting there for a while. Obviously, Tony's become aware that she owns it free and clear, so that's something. I mean, he found that out some way. And, really, he has to sell the listing agent on the concept or gauge their knowledge of it or their interest in it before he can proceed to the client, to the seller. Could be a situation where he's already prepped her for this. But then again, if he's not an advocate for it, it could be a tough sell.
Yeah, it can be hard, but you know, a realtor's job is to submit offers. It's not for them to make the final decision. It's like, hey, do you mind? I know you don't think they're going to accept it, you know, but will you please agree to submit it to the seller for their consideration? How would
You're
you
right.
word that?
Yeah, it is their job, and but you know, once again, you kind of have to sell. You could potentially have to sell two people on it.
Exactly.
You know, if you can get the listing agent on his side and working toward that goal, then that would increase his possibilities of acceptance a great deal.
No, yeah, great point to bring up. And there again, that's why I like the little one-page introduction letter that's sort of an overview of what it means. It means you're just going to be the bank for up to 5 years. I may pay it off earlier. In exchange, I'm going to pay $10,000 over asking, and I'm going to pay you a fair interest rate. And if I don't pay, then you get the property back.
Mm-hmm.
You keep all the money I gave you. And then I like adding the amortization schedule. Here's the total that you will make by being the bank on this loan for me. I don't know if you would say be the bank. I like Bob Zachmeyer because he has such great ways of just making it sound so incredibly simple. Does anyone, you guys know who David is? Or I mean Bob is?
Yeah, I've been to his event. It's amazing. He does explain it very simple. It's like a no-brainer for an owner.
Like, hey, if you could sell this property and basically not avoid or defer your capital gains, not pay the IRS, and you could make like 30% more on this property or 20, whatever that amount is, you know, doesn't that sound like a great idea? So I would just like put that in really plain English on an introduction letter. So for the benefit of both the agent and the seller, if the offer actually makes it to the seller. But I don't know, I would if the offer doesn't make it past the agent, I'd almost be tempted to just send it to the seller. I don't know.
Absolutely.
Yeah.
Hey, Don, this might be a dumb question, but what happens to the agent's commission? I mean, does he still get his full commission?
So let's say let's just, as David was saying, he probably has let's say 6%, right? Anywhere from 5 to 7% total commission, and he's going to get both sides. So let's just call it 6%. So that agent is going to be, what did I do wrong there? 80,000 times 0.06. Okay, that's how much the agent is due, right? And there's also some closing costs, but how much is Tony bringing to the table as a down payment? At 180 at 10% down, how much cash is coming to the closing table?
18,000.
18,000, right? So out of that 18,000 plus closing costs, right? The agent's going to get his 10.8, and the seller has 72,000 to cover closing costs, so let's just say that's another $2,000. So the seller is going to net 5,200 and then start receiving that 869 a month, and then a balloon in 5 years or less. Right? So there's plenty of money on the table. Now, if there's not enough down payment, then the seller has to be willing to come out of pocket to close, and sometimes I've seen them do that. They'll say, I don't care, I'll come out of pocket to pay closing costs if I can just get rid of this property.
What was the capital gains on the 180? Do you know?
Ken and I, so if we go 180 minus the basis, and I'm just assuming, and this is pretending like there wasn't a lot of rehab, right? If there was improved other thing, but if 113 times, let's just call it 25%, they're going to pay at least, and then depreciation recapture. So I don't know. Ken thinks it could be up to 50 grand. So anyway, at least this much money. That's a big check to write to the IRS.
Yeah.
If he's going to pay $40,000, so he can save himself writing that check and let the money keep growing at 5%, in the loan against the property, instead of just writing the check. So it's a really, to me, this is a perfect solution. It makes a lot of sense if everyone can understand it and the needs are such that they don't have to cash out. But the next best thing would be like, hey, if they need, I gotta get 50 grand, at least 50 grand. Well, then I already said that I can bring 36,000 for a partial, and the overall discount to the seller is very, very small. They just have to be willing to wait for the biggest chunk of it. So, but great question. Thank you very much. Well, fantastic. I'm very grateful for you guys being on. Please let me know if you have something you want to cover next month. I always love covering live deals, especially if they're your guys' deals. I really appreciate it. So, and Happy New Year.
Hi, Don. This is Kenesha.
Yeah. Oh, you're
I'm
finally
actually here.
Yeah.
Here. I'm on the phone.
Oh, fantastic. So you had intimated, you were on the Facebook page, you had intimated that you had an idea you wanted to drop out of some
Well,
sort of...
I just wanted to run by everybody really quickly. Happy New Year. Ken, I haven't forgotten about you. He was so gracious. I ended up moving, so now that I'm situated, I'm back on track for that. So look forward to hearing from me soon. Another idea, though, that came out of our last call, I think somebody was talking about the potential for having their files audited because maybe some people are purchasing non-performers and they may have to foreclose. So you want to make sure that the foreclosure will be successful and that, you don't run into the stall tactics that are actually availed to the homeowners. So I figured, okay, well, a couple of things. Everybody knows I've been in the industry for a long time on the origination side and preparing the files for the secondary market, making sure they're audit compliant so we won't have to buy any back, which I'm very happy to say I may have had one buyback in my whole time.
Great, yeah.
And I also, back in the meltdown years, used to work with the homeowners to do the audits, to go through RESPA and TILA to see, do you guys have a defense against Wells Fargo or what?
Oh, wow.
Those kind of things. So I said, well, instead of being available for the homeowner, because there's so much regulation around that, even though I was never one of the sharks that were out there, I was honestly assisting homeowners. Now I could offer my services for the investor. And what that would look like, I know there are a few companies out there that do that. I think one of the companies that I saw, it might have been it was either a blog you did or it came up in our conversation or somewhere it came up, and that's why I reached out to you about it. And I said, well, what will be some suggestions for me offering that service to investors? As investors, everybody's on the call is pretty much an investor. What would make you choose someone to audit those files for you if you were a new investor? Everybody's seasoned, it sounds like, so you pretty much know what's up. But you know what I mean? Like, just some ideas on what I could.
So you're trying to just say, how can I offer a paid service based on my expertise or my background to investors? Okay, that's great. Anyone have comments for Ken? We're having trouble with your audio. I'm sorry to say. Are you there? There's something really weird with that audio. I don't know what it is. Dang it. You were coming through loud and clear on the beginning of the call. I wonder if, but anyway, yeah, that's a great question. I mean, a lot of people, positioning yourself as a service provider that people trust. It's just basically you're starting a business, right? So you have to get out there. I don't know. I don't buy a ton of, like, I don't buy bank paper. So it's not something that, I mean, I think it's a great service, but the people that are buying in volume already have like their attorneys and stuff on staff, or they just don't care. I don't know. Some people are buying so much they can't even look. You're buying it before you even get the collateral files generally.
Right, that's true.
Right? So, but you're down to the onesie twosies, and then you go, well, where are those people going generally? They're going to either they're learning about non-performing notes, and from their teacher they're buying paper, right? And so they're going to trust that person because that person has positioned themselves as an educator and somebody who has product. So I think it could be, I mean, outside of someone who already kind of knows you, like within our group, you're basically saying, I want to start a business. And so you start blogging about it, and you start hanging around, and you start speaking about it. That's the things that you would do to build a business of any kind. You know what I mean?
Yeah, that's true. Because like you always say, people do business with people that they like, know, and trust.
Right. So it's about everything, every way you need to position yourself for any other kind of thing. Like if you're going to be a real estate agent or insurance agent or a whatever. But I think members of our community should know that you have that background, because I would love for, someone has a question. I mean, you'd be able to bring a lot of expertise. So if it's okay with you, I'll add that in a blast. Axel, when we send an email, just make sure that we mention that Kenesha is offered to that service. So,
Kenesha, I have a question for you. This is Dave. Are you a licensed loan originator?
That was the next thing I was about to say. I do have my NMLS, yes.
Well,
So,
I think therein lies the opportunity, and we've had this conversation over the past several months. Whatever state you're in, I'm just seeing time and time again where the investor community, and let's put it in context of a RIA, okay, where there's a group of 100 or 200 or 50 or what have you that meet. I think that if you packaged yourself and went to a group like that and said, hey, I can underwrite help underwrite your your new paper and qualify your would-be purchasers, I think that there's a terrific opportunity in that. I shared with the group and with Dawn that we recruited a person like yourself that bounced around from with different companies as a mortgage broker, and she's now doing this for us. And I've encouraged her to go to the RIAs and network, and the fee that she's charging us for her services is $1,000 per loan. We pass that on to the buyer, and at $1,000 a pop, you could, if you could do 100 of those a year, that's pretty easy math to understand. I think that's where
that's awesome. That's awesome math. Yes.
Yeah, and we're glad to pay it because we pass it on to our borrowers. Okay, build it into the package, and to them that's a reasonable amount of closing costs. I mean, they're going to pay at least that amount if they were to borrow conventionally. So, I think you put your license to work and reach out to the investor community and, offer to qualify these people and underwrite the mortgages.
I think that would be perfect.
Mm-hmm.
Thank you.
Yeah, great. Thanks so much,
feedback
David.
I was looking for. Thank you so much.
Yeah, excellent. Well, thank you so much, Kenesha and David, Kathy, Ken, and Tony. I really appreciate you being here, and I look forward to our next time on the web or the phone together. All right? Take care, everyone. And Axel, thanks again. I always appreciate you.
No
Thank you,
problem.
Don.
Thanks, Don. Thank
All
you.
right.
Thank you. Bye,
Bye.
everybody.
Yeah,
Bye.
thanks.
Bye.
Bye-bye.